Once you have determined that the taxpayer cannot be claimed as a dependent on someone else's return, that they are not filing a joint return, and that their residency is okay, then you have to consider 4 tests in determining whether they qualify for a dependent exemption. These tests include the relationship test, the age test, the residency test, and the support test. First, the relationship test for a qualifying child. To pass this test, they need to be the taxpayer's son, daughter, descendant, stepchild, or a foster child placed with the taxpayer by a placement agency. Legally adopted children are also included. Also, siblings, including half and step siblings, and their descendants qualify under the relationship test. So if the taxpayer is raising his half-brother's daughter, she would qualify as an exemption under the relationship test. Next is the age test. The general rule is that they must be under 19 or a full-time student under age 24 at the end of the year. Age isn't an issue if the person was permanently and totally disabled at any time during the year. So if the taxpayer has 2 children and one is 16 and the other 21, then you know the younger one is okay. But you need to ask if the older child is a full-time student or permanently disabled to determine if he or she qualifies. The third test is the residency test. To qualify, the child must have lived with the taxpayer for more than half the year. There are a few exceptions to this rule. For instance, if the child was born or died during the year, they are considered to have been with the taxpayer for the whole year. There are also special considerations for children of divorced or separated parents or kidnapped children. These are in your book. Often parents are caught unaware by this rule, and with a little more planning could have saved themselves an exemption. For instance, consider the 17-year-old who graduated from high school in June and immediately moved out to live on his own. If the parents could have convinced him to stay with them for just a few more weeks, they may have had one more exemption that may have saved them over $1,000 in taxes. The fourth test is a support test. The general rule for this test is that the person cannot have provided more than half of his or her own support for the year. Those expenses to consider are regarded as the necessary living expenses, such as food, clothing, and shelter. In most cases, this is fairly straightforward. For instance, the taxpayer's 13-year-old likely depended upon mom and dad for everything. It gets more complicated as the child begins working or if the parents separate. In your workbook, there's a worksheet for determining support that you can use in those instances where there's a question. There are special rules for children of divorced parents. The general rule is the parent who has custody is entitled to the dependency exemption, regardless of how much support the other person paid. The most common exception is when the divorce decree or other written agreement specifically permits the non-custodial parent to take the exemption. So, if John and Mary are divorced and their twin 10-year-old daughters live with Mary, Mary would typically be able to take the dependency exemption for the twins. However, if in the divorce decree Mary agreed to grant John the dependency exemption, then John will be able to claim the daughters as dependents. If the person is not a qualifying child, they may still qualify for a dependency exemption if they are a qualifying relative. For instance, consider the taxpayer whose 35-year-old brother lives with him. The brother is not a qualifying child because of his age, but may be a qualifying relative if he meets 4 tests. Not a qualifying child test, the member of household test, the gross income test, and the support test. The first test is pretty straightforward. The person cannot be a qualifying relative for a taxpayer if he or she is already a qualifying child of a different taxpayer. In other words, a qualifying child status takes precedence over qualifying relative status. Next is a member of the household or relationship test. To qualify under this test, the person either has to live with the taxpayer the entire year or be a relative. The definition for relative is broader for this test than it was for the qualifying child test. It includes parents, step-parents, aunts, uncles, and even some relationships established by marriage, such as sons and daughters-in-law. So what about cousins? Although they don't qualify as a relative, they may still qualify for a dependency exemption if they live with you for the entire year. The gross income test states that the person must have less than or equal to the dependent exemption amount for that year. Finally, the support test is similar to those for the qualifying child tests. So let's quickly review the general rules for dependency. First of all, to qualify as a dependent, whether child or relative, the person cannot be claimed as a dependent on someone else's return, may not file a joint return, and must be a citizen or resident of the U.S. To be a qualifying child, the person must be a relative as defined in the book, under age 19 or a full-time student under 24, lived with the taxpayer for over 6 months of the year, and been provided with over half of his or her support by the taxpayer during the year. If the person doesn't meet the qualifying child test, then he or she may still meet the dependency rules under the qualifying relative test. Here, the definition of a relative has expanded, and non-relatives are included if they lived with the taxpayer the entire year. However, the qualifying relative may not have earned over the amount of the dependency exemption, and the taxpayer must have provided over half the support during the year. We've covered a lot of ground in this first session, and it's not unusual to be a bit overwhelmed. In your reading, there are a number of examples to help you firmly cement these tests into your mind. But one more word to set you at ease. The overwhelming majority of taxpayers that come to you in the early years of tax preparation will be traditional taxpayers using single or married filing jointly statuses. Those that have dependents will clearly fit into a dependency exemption. Only occasionally will you wish to refer back to the charts to ensure that you're treating them correctly.